I just want to do a comparison of the candlesticks, and I put a 1 period moving average on top of just blank candles. The directions apparent from the directional line, and I try to make them colored, but the problem is that the yellow, I wanted to make it look like it was a road, blacktop road, double yellow lines. So it's easy for me to see the sideways action and the wedges easier on a 1 period moving average. It gives you kind of a real obvious zigzag. And all this zigzag action here, this was the tumble on the 15-minute last night. So you come into the end of this, there's a triangle here. So if you're into patterns, which the market is, it's into dynamics. And I guess the dynamics form a pattern. So there's a vibration, the market's going up and down, and it leaves this wave pattern, wave in front of you. And sometimes it's just, it's literally just like an explosion, up and down. And so depending where there's a place for it to spill out, it goes. And there was a big hole forming on the north side, so it spilled north. But it kicks back to the shoreline. It came back into this support back here. So on the 1 hour, realistically, if you kind of know what's in the rearview mirror to some degree, but you don't really have to. And I'm beginning to think, if you're going to trade candles from the standpoint of just asking yourself, where is the where is the most volatility? It's going to be these little candles. It's only so what I built was this is a round number. This is the 50, the half penny, and this is 10 pips are these skinny guys, and this one that's marked here is the 25. So this is 25 pips, 50, 100. And so how big is your stop got to be? And so what to do when the market's open on the 1 hour chart? So when it's going up like this, I'm already thinking sell. So I'm a contrarian all day long. And because if you bought this inverted hammer, or you just had trailing buy stops, and you're long, you're already like, I've got to stop here. I'm not even break even. People are getting out here. Plus, you're coming back to the 100, the round number. Plus, people have trailing sell stops in here to protect their long. They're going to feel this move. So, the other way to look at it is, if you wanted to be a buyer, you've got buy limits just pending here, and they actually fill you. And maybe they stopped you out. If you only ran a 15 pip stop, you're out. Now you're going to buy the, so you got stopped out of this. If you're going to buy in the clock, so every hour it goes down, buy at the market. The only time it makes sense to buy at the market is because it's the end of the hour. That's it. Nothing special. Because if it was about price, you would have put a buy limit there or a sell stop there. If you're going to sell at the bottom of the hour, which I couldn't understand, better to buy here and get stopped out. If you think it's going up, just you're buying at the market, right? It's kind of strange. Of course, if you're going to scale into it, and every hour it's down, you buy at the market. You buy, well, actually this is up. So you can't buy that. Okay, so maybe I should turn these candles on color. But let me do that again. That makes sense. Okay, so I'm just saying every time it's up, you sell at the market. You sell at the market. every time it's down, and this is just the market orders only, so let me just mark. I'm going to make market orders white. So imagine this is the walkthrough on this thing. Okay, it went down, so you, and I'm talking about just taking every trade. You think it's going up, this is support, so you buy at the market. And you've got a 10 pip stop, so they stop you out. Then you buy at the market again, and you got a 10 pip stop, and they don't stop you out. So just in these two bars here, buy low, sell high, right? It's working so far. It's up, you get out, sell at the market. Up again, you sell. Down, you buy it, and you buy it, and then you sell it, and then you buy it, and you sell it. And here you're buying, you have your 10 pip stop every hour, but you're not losing too much, right? They finally crush you out. The first time it goes up, here, well, it's not really good at it. It's kind of a rail here, so you sell it. Now you just made some money. Now you buy it. So it's very, it's funny because you're really just saying buy low, sell high. When you do that kind of trading, at the same time though, if you marked off every, say you waited for it to, you would buy at the market if it dropped 25 pips. If that was your rule. Of course, you're kind of babysitting it. If that was the case, you just throw a grid out here, right? You would just, the moment this went up, you already got a sell grid up here. As soon as it starts going down, you're throwing buy limits out in front. So you're picking up on buy limits and at the market. So you've already committed to a grid here, buy limits. You already committed to a grid of buy limits here. And you made money on that trade. So, unless it went down here before it went up, I can't tell here. But, so you just got to look at this buy stop and sell stops now. That's the only trade available. So, now that's another way to look at it. So the bi-directional trader, person doesn't care where this is going. Instead of buying at the market, and I'd only recommend buying at the market if you're like, damn, that was insane. We just went down 350 pips. And if you're disciplined enough to pull the trigger every hour, that it gets smashed here. So you bought this, then you bought this and this, you're long 3. You're kind of up on that trade. You're a bit break even here now, but like here you did it. You only bought here, then you dumped. You only bought here, and you dumped. You're just buying. You're buying when it just goes down so brutal. So here I started buying today. Right here, I'm like, oh, here we go. They're gonna after this wick. 25 pips to here. Yep, and then the news came out. Right, so this is all pre-news. Then the news came out. They took it up into here. They chopped that last. There's a 10 pip window here. So it's a lot easier to see everything right here. So if you're scalping, maybe on another chart, you do have the bigger picture. But my God, right? You don't want to be looking left into, maybe you got the 4 hour here. And I did make this colored here. So if this is in the rearview mirror for our chart, and this is what's going on right now, and this is the same, I actually don't have the 10 pips in here. I just have 25 pips. This has a 10 pip extra marks. So if you go to the daily, it's nothing but a big pullback. So for the real high-risk traders, they had their sells on this doji. Now, it would just be ridiculous. Let's zoom in on this thing. Looking at this in hindsight, and staying with a strict plan to only put stops in on dojis. And big bars like this, you have to have orders on the wicks. Limit orders. Like a big rally up like that. My God, this is not a doji. This is straight up. Well, I guess you could say it's an inverted hammer if you went to like a 12-hour chart. It's probably an amazing inverted hammer right there. But just that wick. You're wicked into that doji, pulled all the way back, stop these guys up, but this happens on the 5-minute chart. Then, like I said, it's not going to stop here. Everybody's selling here. Well, that bottom become tops. No, they crush through that. They take it to this wick. Because where do people like Stapleton have their stop? Well, just above here, nobody will get it. Oh, yeah. Nobody get it. Nobody but the people that just got it. So, and all these stops got cleared out pretty viciously. So that was an obvious play. Now it's kind of back to range trading. Now the pressure's relieved. We can only go. We've got this for our resistance now, and this is the support. So we're probably going to have to build. We got to calm down. We got to simmer down now. And the market's going to have to go into smaller swings, so you can't expect to make a zillion pips now. But there's plenty of pips. I mean, and there's plenty of setups here. So next week it's going to be, buy limits down here. And just a lot of scalps down in here. And the sells, I'm thinking we got to get at least back into. You're not too far away from a selling opportunity. Right here, I guess, is the obvious. And this is at an angle. So, anything up in here, of course. And it's going to be a scalp always off the bat. If you're going to swing trade it, you just put wider orders in. So it just looks like your order bank looks like sell the stop here. So you try to sell this for the kickback to say this area, because you know once they nick the top of that. So just here, another retest here. I got in at the end of the day. If you go to the 5-minute, you'll see that this is a classic. It's just like this trap here where they have to trap that, take it up, trap these guys. Just like 2 pips up there. Risking 4 pips to make how much? 100 pips? Wow. So you have to hit orders at the edge of the market. It just sounds so simple, like you can't believe it. And here, this is only like a 20 pip sideways, right? So anytime it's sideways or quiet, anytime the market's quiet, just keep running buy and sell stops. So it wouldn't matter. No direction needed. When it starts going crazy, there's no way you're going to touch this with stops because the spread's too wide. You could maybe on the 1-minute chart. So if you drop down to, say, the 1-minute chart today, and it's not for everybody, but you're probably going to have to zoom out. It's just like a tick chart when you're done. But if you're looking at this, it's obvious, You got to have your finger on the trigger, though. You got to be ready to go. I think you got to trade the market on this thing, or be aware of the fact that you're putting in sell stops as it's approaching this. But here was the double top. Or here was the rejection of this. So this happens over and over again. So this was support, but this was the trap. When they came down into here, people were like, oh, they're just going to keep going down. No, they rip it back to this, and then it's got to come down here because we have to negotiate this 10 pip window now. So you're risking 10 pips to make, 30 pips, right? That's the way it should be. 10, 20, 30. So, but you have to wait for that. But here's just like silliness, just up and down, up and down. You really have to get the rhythm of how this thing's going, because if you don't have that, you just have super deep orders. So at this point, who's thinking this thing could fall 100 pips in just a few minutes? That's the 1 minute chart. If you're looking for candle setups on here, man, you're buying it, you're selling all the time here. It's going down. Keep selling at the market. Every time there's a doji, you know that it's quiet. That's what you know. It's quiet. And here, look at this. Here's a triangle forming, and it wouldn't matter whether it's ascending or descending. It's just the fact that the market's getting a little bit too, and they're above this thing, right? So this breakout's failing off of this. That's a problem. 1 minute chart. The problem with the 1 minute chart is that you see this and you've got to get out. You've got to buy. If you're short, you got to buy, because you can see that this is the big fake breakout. Sure, it looks like it's breaking out, but in essence, that's the trap. And look at this triangle here in the 1 minute. You see this stuff setting up. If you have a 1 minute chart going and you don't take too much importance of every candle, maybe, but you can see the broad view is the triangle. That's a real nice, and you can see how many pips you're risking there. Let me just give it like 5 pips. 5 to make 10. And then it just keeps churning. And you could actually have more confidence on the 1 minute chart, because look at this top becomes a bottom. You're just holding. And everybody's happy to get that big round number. And look how it responds to that round number. So you can really see the devil in the details here in the 1 minute. I think it just accidentally zoomed out like way too much there. Yikes. But look at this response here. Bam, bam, bam. Come back, fly through there like, woo. Didn't quite make it to the round plus 10, so this is the 5. But it really depends how long you want to be in the market. Now, these trades take like 5 minutes, 3 minutes, 7 minutes. But all these patterns still hold true. You know, the 5 minute chart, all of a sudden it looks like you don't have the patience for this. So here's the 5 minute setup, but inside the 1 minute chart, you can see, oh boy. Now you could build a position there at the market, or you just got your limits sitting at this, right here, at this bottom. Never got filled, I don't think. But you would put your other order at the shoulder. So if you think this is the head, so if you have a shoulder, you have to assume this is the head. Looking for the next shoulder for entry. This should serve as resistance. It absolutely does not. So you got a triangle forming there. And just a long sell-off. So you just buy. Got to get out because everybody's getting out there. Last known high. Or take off something. But yeah, that's, who's waiting for this stuff? I don't have the patience to, here's the 30-minute chart, right? Same stuff. A little more patience needed for this. But, it's never, when the market goes nuts like this on the news, it's just about a lot of different opinions all at once. Oh, that was yesterday's news. This is today's news. But see, this happened at such a critical zone. And if you look at this top becoming this top, and so you're going to see the same thing here on the half hour. Is this going to be resistance? It kind of smashes through it. It actually has a better touch inside this, where the top became a bottom. Became the double bottom for the lift off. and then it retested here again, came back up into this double top, selling that. So what's the next trade? Well, obviously buy limits down here because you're going to trade up into here. Buy limits on top of this guy. Sells up in here for the ricochet back to here. This is probably going to be the next debating zone. People are going to sell off of that and then probably going to have to bust through. But I think in the long run, it is really going up. But the thing is, there's plenty of money to be made in the congestions, in the debate on the way there. Like, even if you were kept buying this as it pulled back, and you also had your buy limits here, you're building into this wedge, and you have some buy limits here. They never got filled till the next day. But it's right off of that top. On the half an hour, this tops and bottoms, they're totally worth placing orders at. Because, plus they're totally worth drawing a trend line on a half hour chart. 15, okay, you got to keep drawing it. But look at the trend lines on this. If you just did lug head trading, right, first downtrend, you know that that's a downtrend because, stalled out there, went down, soon went down here looking for places to sell. But you can't sell at this trend line because they crush you. So, better to find a trend line off this fractal back here, this last wedge. Just drag that forward. So that's why they got average rate of descent lately. That's the rollover point. But it doesn't mean it's going to come up and just totally. You're still getting in. Every half hour that goes by, you have to make a decision. So, if you go with the doji system, you're just putting buy stops on dojis and sell stops without any direction. Forget direction. It'll go. If it wants to go down, it goes down. You just go along with the flow. And this volatility system gives you only a few choices. Right now, it's buy stop, sell stop. Sell limits and buy limits away from. But nothing in between because you need to take profits on the way to the next turnbuckle. Here, these candles are too big these bodies are too big. I wouldn't say the candle. I would say the body. Because if you're trading these bodies, you're trading flags. You're trading breakouts of bodies. It's a body breakout. It's not a wick breakout. So if you came into the, maybe I could do it on here. I was going to do this with the, turn off the, so I actually fatten the bar up. So the real candle in MetaTrader looks like this. But I can't see these wicks too well. I really wanted to have a fatter wick, but what I'm going to do here is just turn off the wicks. So since that overlay's gone, I'll just go to colors here and I'll have the bar. The down bar will be none and the up bar is none. And this way it's just bodies only. So this is if you never had to put a stop in. And what if the market was really like this without wicks? Wouldn't it be easy to trade? Well, in a way it is. It's easier to see what kind of order you're going to put in. So this is like an order type entry thing. And the wicks, there's nothing you can do about if they're going to spike it or not, right? You have no control over these flash wicks that are deep. The only thing you got control over is putting limits out to capture those if they should occur, or just have these things trolling and trailing and all this stuff in case it happens. But if you looked at it this perspective, you're looking for very small bodies under 10 pip bodies, under 5 pip bodies. You just put in buys and sells. You just bracket this because it's going to flow. Now, if you go to the other time frames, now you're looking for bodies that are, the smaller the body, the bigger the order, and the tighter the stop. Because you're going to make money from the fact that, oh, here we go again. So you cannot pick the rate of explosion and So the ultimate is going to be these candles that you can't even hardly see. So if I take off the direction here, I'll just delete the moving average and look at just the what kind of order are you going to place. So you don't know anything but the bodies. And so the guy said on the video I watched, he said, do not draw your trend lines on the bodies. I thought, well, you have to, though, don't you? Look at these small bodies. So here's a buy stop, sell stop, buy stop, sell stop. Anytime there's a small body, so you see all the dojis are very easy. So it is kind of, you're filtering, there is no wick. And you can really see how mechanical trading is got to be in your plan. You cannot just live off of ridiculous speculations. We can all speculate, but in the end, I think it comes down to, like, how do I know when to get in? And you can't get in on stops here. That's 50 pips. Wait for a small bar. Put buy stops on that, or sell stops, or buy limits, but keep it tight. Keep it tight. Let it take you in. Here's 3 in a row. Body only. You don't know from that. You have to wait for the close of the bar. So this is also an entry. Smaller, the bigger the order. Smaller the body, the bigger the order. Bigger the body, the wider the limits. Maybe no stop on that. Or wait for the end of this. Big down hard, buy at the market. Yeah, they're going to wick this thing, and you can't see where they took it. You could, so you have to, or maybe you could just make the wicks faint, right? Make them kind of inconsequential on here. Make it, go with a color that's here. This is dark gray. You probably barely see it, like a shadow on here. Okay, so you can barely see the wicks on there. But you can see the brutality of that wick. It wouldn't have mattered, right? Because if you had buys and sells on there, you know this is a small body. Don't be discriminating. As long as there's nothing you can do about it. You have to have a diversification of orders. You need a spectrum of at least 5 different stop styles, 5 different ratios, and some are wide, and maybe those are small orders. The bigger orders, tighter stops. So you make this quick money. Here, the breakout of this zone here. So that's a 1 hour chart. Within that hour. Now they kick back here. They kick back here, and they would stop you out if you have too tight of a stop. But that's always going to happen, unless you're buying on limits at the same time. Now the other approach would be a dead in the water order like that, and you have buy limits and buy stops. In other words, you're planning on buying. So that's another thing to consider. Now, if you drew all your trend lines, I'll turn these wicks off, because it really is not. If you're getting stopped out on that, then it's overall too tight. And you should get stopped out of some of these things. But that'll be the thing to gauge how much punishment you're up for. Now it would just be like, how about you just draw the horizontal lines on the bodies now? Of course, I've got the risk grid up there, but if you had to get in a breakout entry, so right when this thing closed, whether it closed up or down, it wouldn't matter. It's just the fact that it's a small body. You have buys and sell stops in there, or maybe you have sell stops. A logical thing is to have sell stops because you're high up. So all these candles like that. Now, the 5 minute, it's going to have to be your real entry, though. I'm just showing that for people that want to risk a lot of money, which I'm not up for. So, here, look at this. Only small bodies do you enter at the market or on stop super tight. You're not allowed to trade this bar. And if you wanted to trade this in pendings, you put your pendings right at the top of that body. The bottom of these bodies is your sell limit. And you know you got fill because there's got to be a wick beyond this, right? There's no way this thing didn't have a wick on it. You very, very rarely see a shaved candle. You'll never see candles like this, so you know right there that it can't be, right? Retest of the body entries. And I had a thing where I was able to switch these candles on and off, and I can't. I hate to, but you could mark this. In other words, it's would you take that trade kind of thinking. So here, this is the argument for binary trading, is that it broke through this. It went both ways here. It went up, went down. But that's the nature of getting in at the market or getting in on this stuff. Now, big smash down. You really can't put a stop on that because logically your protection has to be up here. As soon as it dies down, you get picked up in this thing. This is just sell stop, or buy stop. As long as they're tight, it's about the difference between this 10 pip window and this big smash down. So these are always going to be the low risk entries. If you just mark that off, you always see where your window of entry is going to be. So go to the only chart you could afford. Now the half-hour chart, you can see this is cheaper to get in here, and it's just it's like Lego, you know. It's just you can't miss this stuff. This quiet thing down here. Well, hell, you're buying that, and there's going to be that thing where it dilly-dallies around, but at the end of the day or the end of that session. So here you can see, it's caught sideways, falls down. A lot of volatility. This last candle has less volatility than these other guys. So you want to buy at the end of that session, whether it's up or down, just by the fact that it's a small body. And maybe you sell at the market, but see, you get stopped out of one leg of that. Even if you still made like double your money, because this is a triple your money move. So if you get stopped out of one leg, depending on how tight you put your stops in. So look at the daily here. Very few trades. Look at all the stop entry trades of just getting in on stops. That's ridiculous. Look at this fake breakout here. But boy, here, look at this. Yikes. Not missing data. I guess this total doji, you can't see it on here. It's strange. I guess this is like a doji just doesn't show up on this when you do it like this. But yeah, look at this 4-hour windows. So here you had like, if you pick all the baby ones, you have these trades. Maybe there's 10 trades there last week. This week there was only these 3 sideways here. Big accumulation phase. Market keeps on having a battle here. Here's a sell. You just would have got filled on the sell of that. Another buy there. So that was retrace. It wasn't a lot of pips, 50 pips, 25 pips there. If you bought down here, you can't see the wicks, but if you would have bought on limits. But I guess this is like trading on the clock. At the end of the hour, at the end of 4 hours, do you have any range? No, just put an order. And here it's just quick on the draw. 15-minute chart. You're waiting every 15 minutes. So we got a nice lift off here. Cut through this. But there's plenty of different ways to look at what's going on here, and some of this stuff is just. So in the weekly, not very many small. Here's the big small window. That was the trade. Look at the low risk entries here. These little dashes, these pauses, and then just rips. Look at how low risk these entries are here weekly. Look at that. All the way back up into here. Crazy. It's a wacky currency. Look at this pivot, just dead in the water. Doji. Sting. So you can see the dojis here real easy. Inverted hammers. It doesn't matter, they're all the same. It's all about windows, entry windows. So the 1 hour, 24 windows a day. There's no trade here. You have to go a smaller time frame. Go for the smallest candle. I'd say half hour. Half hour is doable. 48 decisions a day. Not all of these are great trades, depending on how tight your stop was. But this pause here, they satisfy that number, come back. Yeah, it's crazy. So yeah, the British pound definitely got some. It definitely goes nuts here. I'll take a look at the 1 minute chart. So when you zoom out on this, of course, these bodies just kind of look, yeah, I can't see them. Just lost all the data there. Oh, get the chart shift off on that. So I blew the data up on that. Like I say, I turned my chart shift off. I guess I crashed that. Oh well. That's bizarre. I'll go back to square one. So, I guess it doesn't like it when you do that to it. Okay, so, yeah, but now you can see the wicks on here, so you can see the punishment. But now you can see the bodies. There wasn't a big wick on this body. So definitely it's better to have a small wick and a small body. But if all you had was a body to go on, and you ignored that hammer, so you can see that, it would just be, you would never get stopped out. If you had a trailing stop on this, you're only getting filled on the short side. So you could put a completely hedged order, whichever one fills. It's just so when it gets violent here, and this is a 140 pip range. Wow. But obviously now buy stops on the 1 hour, on the half hour, buy stops, buy limits down here. Because of this price, because of this top, they're going to want to, they would love to get this thing 25 pips cheaper. Who wouldn't, right? Even here, you get the 25 pip ride. Even more if you hang in there. Because it's just 25 pips. I don't have the 10 on this one. But yeah, so that was crazy. And definitely here is going to be the obvious buy. 144-ish. We almost hit it today. 144.32, whatever. But once you drill down, you see you need a bunch of orders in here. Put them 25 pips away, they're just going to look like this. Or just put them, definitely cluster in here, because that's going to be a great place to ride it back up, but you may never get it, so if you're eager, you put buy stops in here, sell stops in here. You play this either way on Sunday night. Buy limits just beyond where everybody's got their stops, and buy limits here for the scalps. But yeah, just expect them to smash it down. It's always like one more time with these people. They love to just retest. It's like they just can't seem to get it right. They're too dumb to pass the test, so they keep retesting. So down here was the retest. Below that double bottom. And just easy trend line, sitting here waiting, itching to be broken. Where this is going to be, where they can take it to. They resist that, ricochets off, but that's the trend line to break there, and I guess the last trend line break that made money was here, so they could come back up into that. So as this thing was going up, just looking back only 2 days on this was the support, all the bulls were helping keep going up. And then move this to the last known support, last hope for the bulls. It's not working out. And people just keep drawing this trend line. Oh, maybe it'll hold here. No. And then maybe it'll hold here. Nope. So, oh boy, what about this one? So we could definitely keep tumbling down. I guess if you want to build a channel, you can just take it off of this. But maybe this is the end of this walk down for now. Now we gotta go, now we gotta go for the, but I like to see how steep these markets really are, and see what it looks like when they go after these bearish protection stops here. That's always a great place to get on, right where everybody's got their insurance policies.